Hello and welcome to another update video. Today we want to take an updated look at Tesla. Yeah, Tesla has performed really well this year anyway, for a long time, but specifically since the April low, the price has followed nicely the bullish projection. And so we want to talk a little bit about the Elliott wave structure, and then I will also talk about the fundamental aspect. Afterwards, we'll try to, give you guys a bit of a better overview of the financial data around the business. So we'll take a look at that. What we're dealing with at the moment here on the Tesla chart, on the larger time frame, this is where we start. We're dealing likely with a fifth wave to the upside, which is an ending diagonal pattern. That fifth wave started in December 2022, January 2023. That was the start. Long term, I view $1,000 plus as likely for Tesla. From a technical point of view, makes sense. But the move up will be bumpy. It will be bumpy ride. I would not expect very clean patterns, mostly three-wave movements, because in the end, while we are still in a larger degree third wave, it's a fifth wave of a third wave. And this is when it's getting messy and choppy. And the idea is we have a wave one, a wave two, and we're now in the third wave of that fifth wave. And because the wave one was a three-wave move, which told us it's likely going to be a diagonal pattern, and honestly, that wave count hasn't changed for a long time, yeah. Which means even though it's a diagonal pattern, which is typically unreliable, it's following it. So the third wave would be an A, B, C structure, and that C wave itself, and this is where it's getting difficult, can be a diagonal pattern as well. So we have different variations of microstructures here, but to keep it simple here in the videos, this is the first main support area here on the daily chart. $307 to $383. Any break below 307 will mean that at least this is a wave 2, but the first one is this one, where I'm tracking a 1-2 AB structure, yeah? So if the direct move up is still unfolding, which at the moment I still think it is, so I have no evidence that a larger correction is indeed unfolding, then the market should hold above $307. That is also indicating that we're holding the June, July lows, yeah? That would be my preference, yeah? Any deeper pullback could be still seen as a wave 2, but will be a bit difficult because it would be a very long wave 1. But yeah, we can say if this is an ending diagonal, I don't want to get too much into the detail here, then this is A, B, C in wave 1. We get an A, B, C in wave 2, and then still go up. That means really there are still a lot of different bullish scenarios that could play out here. Even this, A, B, C in blue wave B. Yeah, it's also possible. So you see, there are many support levels and many bullish scenarios that are available here that we can use, which means, okay, surely the price might break upper support, but there's still more there to support a bullish outlook, all right? Even if maybe the first micro support area breaks. But for now, we're not even in this first larger support area. So that's where we have to switch to the smaller time frame to see what the microstructures are doing. And at the moment here, on the micro level, now price is currently at around $424. I record this video here pre-market, so we see some upside here. And I mean, you see for the yellow scenario, I shared with you the larger pullback opportunity in yellow. This means that this A wave I shared just on the larger time frame might indeed have topped. That was a possible top here in October at around $480. And then we have an A wave down. We might now be working on a B wave up and could then get a C wave down. This is one scenario. I don't fully believe yet that we have really topped there in wave A and that we are really in wave B. But if the market breaks below our upper micro support zones here on the short-term chart, we're likely up for that deeper B wave pullback. So, I mean, even if you watch the video in a few days, it'll still be relevant because if the price has started the decline, then you know what the larger support area is. I just showed it to you on the larger time frame. Now, looking at the directly bullish potential, I still have one more high potentially here on the table in this short-term pattern. And that's because the pullback after the October high was a three-wave move down. And I can still see the potential also on the NASDAQ for maybe higher prices here. Yeah, potentially in a direct fashion to around about $530, but that would require a break above 460 to confirm that further. So that's what I'm watching here for on the Tesla chart. That means bullish in the very short term. Even Tesla is trying to form a low, but is really just relevant in the very short term. So that means overall, I view Tesla as interesting stock where pullbacks can be opportunities for many, investors. It might be reasonable to wait for a decent pullback, but again, I'm just sharing with you that my view is we should be quite close to at least a local top, right? Maybe we've topped already in wave A and we're already in the B wave, or we get one more high before the next decent pullback. For now, we're just here in a range on the local level and have performed quite well. I mean, Tesla has performed quite well from the April lows, but I think that rally from the April lows is close to being completed, which isn't bearish. It just means that maybe the next pullback opportunity is around the corner. Today, we don't want to only leave it with the technical aspects. I also want to take a look at the fundamental side of things, want to share with you some thoughts around Tesla as a business and some financial metrics. If you're interested, stay tuned. That also, we can then think about, okay, how does actually Elliott Wave fit into this, right? So let's take a look at our partner brokers X station. That's the dashboard here where we can also access Tesla's financial metrics and details. If you're wondering where to trade Tesla, I mean, you can consider to check out also XTB, which is our partner broker. Here you can trade Tesla on different, you could say marketplaces. And I'll select the US stock here. If you decide to sign up, you would support our project here. We can give you, lots of analysis every single day here on this channel. So you would support that. It's an affiliate link. And XTB is a broker where you can potentially get a free stock depending on where you're located, 0% commission, free deposits, withdrawals, no custody fees. You even earn interest on your, on your cash. 10,900 instruments, more than 1.7 million investors. And for us, it was quite important to choose a broker as a partner that is available worldwide because, while MCO is located in the UK, a lot of our viewers are in different countries, Germany, France, and so on. So check it out if you're interested. But here we can take a look at the financial metrics. That's what I actually wanted to show you guys. And so what we can do here is we click on info and we go to the financials, and then here you can see the entire, the entire financial side of things, the balance sheet, financial metrics. So let's take a closer look at Tesla's current financial situation, because these numbers tell us a good story of what's going on in the background. Yeah, and I'm always a fan of taking a holistic look at a stock, right? So first of all, let's take a look at earnings per share. That means for every, it's 1.83 up here, yeah? So that means for every share of Tesla stock, the company earned about $1.83 in profit over the past year. It's a solid number, but much lower than during the high profit years of 2021 and 2022, mainly because Tesla has been cutting prices across its vehicle lineup to defend market share. So it shows that Tesla is still profitable, but its margins are tighter as it competes in a more mature EV market. So it's getting more and more difficult. Then we've got ROE, return on equity, and return on invested capital, ROIC, also up here, 8.24% and 5.77%. These numbers tell us basically how efficiently Tesla is using its capital to generate profit. And those returns used to be much higher when margins peaked. But even at these levels, they remain positive. It's a sign that Tesla is still a strong operator, just operating in a more competitive and cost-sensitive environment. The operating margin, you find it down there, currently at 6.23%. It's a key shift. A few years ago, Tesla's operating margin was around 15%. And that was extremely high for an automaker. Now it has dropped back to industry-like levels. So the story has changed from hyper profitability to efficiency and volume strategy. So Tesla is focusing more on scale and affordability than on premium pricing. Then we've got a debt to asset ratio is only 1.0 no, 0.13, 0.13, and total debt to assets is 0.17. That's excellent. So Tesla has very little debt, and that's one of its greatest strengths. So it gives the company huge flexibility. And even if the macro environment tightens or interest rates are high, for example, Tesla doesn't face the kind of balance sheet pressure that most legacy automakers do. That's an advantage. What else? A current ratio. The current ratio is 2.04. That means that Tesla has twice as many short-term assets as short-term liabilities. That's a healthy liquidity position. Yeah, it can easily cover its bills and short-term obligations. What else? What else? I mean, maybe PE ratio is 255 and price to cash flow is around 95. They are still very, very, very high numbers. Very high numbers. That tells us one important thing. The market still values Tesla as high growth. Yeah, otherwise they wouldn't be that high. And not as traditional car manufacturer. So even though profits have come down, investors are still paying for potential like AI, robotics, autonomous driving, and energy storage. And in simple terms, basically, Tesla's valuation continues to price in the future, not just the present. And I think that fits so well into the Elliott wave story. We're going to take a final look at that in a minute. Maybe a final one, EV to EBITDA, it sits above 100, which again shows the valuation is stretched. But that's typical for Tesla. So the market is giving it credit for innovation and new technologies that may not yet be fully profitable. So, I mean, looking at financial strength, I mean, despite the compressed margins and slower earnings growth, my view is that its balance sheet remains one of the cleanest in the entire auto industry. Debt is minimal, yeah, liquidity is strong, and the company is still generating positive free cash flow, even in a tougher pricing environment. And that's important because it means that Tesla is funding its R&D. It can still do that, factories and also AI initiatives internally, yeah. And it's not borrowing or issuing new shares. Now, the numbers show that, in my view, Tesla is in a transition, yeah. It's no longer in its explosive high growth phase, but it's also far from struggling, and it's also not a normal automaker. It's a profitable, cash-generating business with a clear and clean balance sheet. And it's just competing in a much larger, more competitive market. Now, the margins remain down, and the valuation remains high, but the underlying fundamentals, like balance sheet strength, yeah, brand power, and cash generation, they are all still in place. Now, to me, Tesla is one of the most fascinating companies on the market. It's financially solid, it's efficient, but in a new phase of its life cycle. It's no longer a story about growth at any cost. It's about proving that it can, grow still aggressively and innovate, but that it can remain profitable and innovative in a more mature, competitive global market. So again, it's not just a tech dream as it was like many years ago, right? It's a real business, real profits, but it's not it's starting to transition maybe to a value stock, but we're still far away from that. Okay, it's just entering that new phase. Also, from an Elliott wave point of view, that makes sense because once we approach these fifth waves, it's getting much more messy. Yeah. Now it's interesting because if we say it's still highly valued, you would say overpriced. It's too expensive basically from a if you use traditional metrics, yeah, and compare it to a value stock. It's not valued like a value stock. And again, that's normal for Tesla. And I think long term those valuations will come down, maybe in this fourth wave here. But also its growth is priced in. So also from a price point of view, that that is still showing there, right? The growth is it's already baked into the charts. At the same time, it's kind of overvalued, which means in the short term there could also be that correction, maybe in a B wave or a wave 2. That's due after rallying, after basically doubling its price. Yeah. So definitely I'm watching for that. Those could be opportunities. I'll keep you updated about that. I hope you liked the update. I hope it added some value. Give me some feedback on the combination of fundamentals and technicals. Gives you guys a more holistic point of view and hopefully adds some value and additional service here to the video. So hope you enjoyed it. If you're interested to maybe trade or invest in Tesla, feel free to check out XTB, our partner broker. The link is in the comment section. And I wish you a great day. Make sure you subscribe, leave a like. Thanks so much. Bye-bye.